how you can trade the previous day's high and low strategy. It's three simple ways you can trade the previous day's high and low strategy. Now, these are the three ways you can actually trade the previous day's high and low strategy. The first one is trading it as a double top or double bottom on a lower time frame. The second one is using a buy stop or sell stop after a breakout. Okay, the third one is using a break and retest after a breakout. Okay, I've actually made videos on the first strategy. I've made two videos on the first strategy, which is using trading previous days high and lows as a double top or double bottom. This previous days high and low strategy can be one of your best strategies you can trade. It is a very, very lovely strategy that can actually help you to make money consistently from the forex market almost every day. But you need to understand how to trade it effectively. So that is why I'm making this video for you. After this video, you should be able to know how to trade the double tops, not the double tops though, the previous days high and low strategy using any of these three methods I'll be explaining to you. But the first method, I made two videos on them, and I'm going to share it in the description box of this video. So try to view it. Okay, so let us go into it. The first one, I just want to do a summary of the first one since I've made videos on that. So I want you to view those detailed video on the first way of trading double tops and bottoms. So the first one, what you need to do when you wake up, if you are trading the London session, you need to activate your period separator. Okay, when you go to your settings of your MT4, go to MT4 setting and activate period separator. What does period separator do for you? It will separate each day. it will separate each day from another using the period separator lines. All right, it will separate each day from another using the period separator line. So assuming this was yesterday, and this is a new day, we just entered into a new day. What I'll be expecting to see is either a double top that has formed, waiting for another double top, then I'll enter on the breakout of a breakout. All right, and I'll put my stop loss right here, and this will be my take profit. Or I might be expecting to see a double bottom formed into the new day. Then I would wait for the double bottom to form completely. I'll enter upon the breakout of the double bottom as a buy trade, having my take profit and then my stop loss placed at the other side of the double bottom. All right, so this is one way to trade the previous day's high and low strategy, trading it as a double top or as a double bottom. Please kindly see the previous video I've made. I'm going to link it on the description box of this video. That will explain further. But the two other strategies I'm going to be sharing with you right now, I will explain it carefully, and because I have not made video on this, so I'll be explaining the two other strategies now. So the second strategy of trading the previous day's high and low is to place a buy stop or sell stop. Okay, place a buy stop or sell stop all right, above or below the previous day's candle, daily candle, all right, above or below the previous day's daily candle. But the premise or assumption, I'm going to show you on the chart. Don't worry, I'm going to show you on the chart. The premise or assumption for the two strategies I'm going to be sharing with you right now is that the market or price, if price, let's say if price breaks the low of the previous day's candle, it may move further low. Or if price breaks the high of the previous day's candle, it may move further high. All right, so this is the premise or the assumption of the two other strategies or method of trading the previous day's high or low strategy to you. All right, so it says that if price moves low or breaks the low of the previous day's candle, it may move further low. And if price breaks the high of the previous day's candle, it may move further high. All right, so now let me show you how you're going to trade this. This is the second method. How do you trade this? The steps of trading this strategy. The second method of trading, about the steps involved. The first thing you need to do is to identify a trending market. All right, what I mean by a trending market, a market that is either bullish or a market that is either bearish. We already know as a forex trader that the best trades occur on a trending market. The worst trades occur during a consolidation. All right, so or a range. So you need to identify a trending market. Second thing you need to do, you set buy stop above the daily D1 daily candle and sell stop below daily candle. All right, in order to catch the breakout. All right, you are doing that. You are placing you're setting your buy stop above the daily candle or your sell stop below the daily candle. The reason of doing that is so that you can catch a breakout of that. Let's assume this is your daily candle. These are candles. Okay, this is your daily candle, the previous day candle. So you place your buy stop right here and your sell stop right here. All right, so you're expecting that the market would the current day candle could activate your sell stop. If it activates your sell stop, you're expecting that it's going to continue to sell. Or if your current day candle activates your buy stop, it's going to continue to do what? To sell, to buy. All right, so that is the premise. That is the hope. Okay, so for your stop loss, you place your stop loss once your previous day's candle or the previous day's candle high has been broken and you enter a buy trade. You place your stop loss at the half or 50%. Place stop loss at 50% of the previous day candle. Okay, when you enter a buy trade or a sell trade, as a result of of your buy stop being activated, you place your stop loss at the half or 50% of the previous day's candle. Now for your take profit, don't worry, I will show you in the chart just in a while. For your take profit, what you do for your take profit is that you're going to use the average of the last 3 days candle, okay, as your TP. All right, assuming you have the last 3 days candle, you have the last 3 days, one moved 300 pips, another one moved 50 pips, another one moved 100 pips. The total of these are the last 3 candles, last 3 previous days candle. Total will now be 250 pips over 3. That you are taking an average over 3. You're going to have 83 pips. Okay, so this 83 pips would be your targeted take profit, the average of the last 3 candles, 3 daily candles. So, but we're going to go into the chart. Let me show you in the chart now. Let me just show you on the chart. Let me show you on the chart how this works. Let's look for a trending market. Now you can see here. Let's assume that this was our previous day's candle. Okay, I place my buy stop right here and my sell stop right here, and this is my current day candle. Let's call this previous day's candle, and this is my current day candle. All right, so you can see that my buy stop order would have activated when this candle started going up, and my stop loss will be just at the 50% right here. Okay, my take profit will be a sum of these 3 previous candles, how long they moved or how many pips they've moved, the sum and average. You take a sum of 3 of them and then take an average, you divide it by 3. So that will give you my take profit level. Okay, be my take profit level. Let's see another one. You can see here also, like in this case, if this is my previous day's candle, this is the high and this is the low. So I'll place my buy stop order right here and my sell stop, buy stop, sell stop, just few pips below or few pips above. So this candle activated my buy stop. I'll place my stop loss right here, and my take profit would be the sum of these 3 candles by taking the average of these 3 candles. You take sum of them and divided by 3, average of these 3 candles, the 3 previous candles. All right, so this will be my take profit somewhere around here. Okay, so let's see another one here also as well. As you can see here, place my stop loss above, my buy stop above, my sell stop above on this previous day's candle. So this new candle, this current day candle, breaks this just few pips above, took out the previous day candle, and this trade will be triggered. This is a buy stop, sell stop. So this will be taken out. So if I take an average of these 3 candles, these 3 previous candles will give me my targeted take profit. All right, so this is how this strategy actually works. Let's see a sell scenario for a trending market. Let's see a sell scenario. Okay, like in this case now, this is a market that is trending downward. All right, here, if this is my previous day candle, I mark the up and down, the high and the low of the previous day's candle, and this is my current day candle. Now you can see that this one was taken out. The sell stop would have been taken out by this candle, and the trade will be activated. All right, if I take an average of these 3 candles, this will give me my TP target, and now place my stop loss at the middle of the previous day candle. All right, or 50%. All right, so that is it. Okay, many of them are bound. Just take out look at this particular one now. If I should place my sell stop right here or my buy stop right here, and this candle This, see how my stop loss, this candle, this current day candle would have activated my sell stop. Okay, this is my buy stop. Mind you, this is on a daily time frame. Daily, you do this strategy on a daily D1 daily time frame. Don't forget, you come to daily time frame to do this. So when you wake up, if you are trading in London session or New York, whatever session you trade, you wake up, go and identify your daily candle, your previous day candle. Go to your D1 time frame or your daily time frame. So identify the candle. Look, check for the market you trade. You may be trading the Euro USD, the AU, or the GBP USD, or the USD card, whatever currency pair you trade. All right, so it has to be on one of the major currency pairs that is trending. It should be on a trending market. Avoid trading consolidating market. So when you do that, this sell stop activated. All right, so you see how you take these three previous candles will be the average of these three previous candles will be my TP target. You see my TP target somewhere around here, my take profit, and your stop loss will be at the middle of the previous day candle, or the 50% of the previous day candle. This is how this strategy works. It's very, very easy. It's one of the easiest strategy that beginner traders can trade. All right, comfortably. You don't need to think too much. It's a very clear and straightforward strategy. All right, beginner traders can trade this strategy. So just go to your day one time frame, or rather your daily time frame, and trade this strategy once you wake up from sleep in the morning. All right, so now I want to show you the third way, which is a very lovely, a more advanced way of trading this previous day's candle strategy. All right, the third one. So the third one, what you're going to do for the third one, the third method of trading this previous day's candles. What you're going to do, first thing you need to do is to identify the market trend as usual. Identify the market trend. Second thing you need to do, you wait. It's similar to the second strategy. The difference between this third method, and the second method is that in this third method, you are waiting for a break. You wait for a break of the previous day's candle. After the break, you do not enter. All right, you do not enter. You wait for the high. Or low to be taken out. So once the high and low is taken out, you have to do what? You have to step down to a lower time frame. Okay, like your M5 or M15. All right, your M5, your 5 minutes or 15 minutes time frame, you step down. But the second strategy, you don't need to step down to your lower time frame. You just get in on your D1 time frame. But this third strategy, all right, this third method, you have to step down to your 5 minutes time frame or your 15 minutes time frame. You have to step down. Or I'm going to show you why you need to step down. So when you step down, you are actually stepping down in order to identify when you step down on it, you identify an area of support or resistance. You are identifying an area of support or resistance on your lower time frame, which could be 15 minutes or 5 minutes. So you want to identify an area of support or resistance on a lower time frame, because once this previous day candle high or low is taken out, is broken, it's usually a resistance level on a lower time frame or a support level on a lower time frame that has been broken. So you have to go step down to lower time frame to identify such level. So when you identify such level, you wait for, and start breakout has happened, you wait for a retest. Okay, you wait for a retest of the breakout level. Okay, you are waiting for a resistance or the breakout level and you enter the trade on the retest. You want to allow price, after price has broken the level, a support level or a resistance level, you allow the price to come back to that level and you get into the trade once price comes back to that level and show you a sign of a buy, like a bullish engulfing candle or thereabout. All right, so for your stop loss, you are placing your stop loss below resistance or above support, or below a swing low, or or above a swing high, if you are doing a sell or a buy trade. All right, you are placing your stop loss above or below resistance or support, okay, or swing high or low. Okay, you are placing your stop loss at a swing high or a swing low at the lower time frame, or below the support or above the resistance, as the case might be. For your TP, your take profit, you can actually do trailing stop loss. Okay, you can actually do trailing stop loss for your take profit, or you might just want to do 1:2 or 1:3 or more, as the case might be. All right, so now I want to show you on the chart how this works. I want to show you on the chart how this actually works. All right, like you can see now, we are having a break. This is our previous day candle for the daily time frame. This is our previous day candle. This is our current day candle on USD card. Current day candle. By the time I'll be posting this video, this candle may have either bought higher or lower, who knows. So this is a previous day candle, high broken. So what this is, if you go to lower time frame, you got to find that this is a support, this is a resistance level that has been broken. All right, this is a resistance level that has been broken. All right, so you need to identify the resistance level that has been broken, and you're going to, on a lower time frame, you're going to wait for a support. This is broken, wait for support, and you enter like this. All right, that is it. So let us actually see. Let us place a mark there and see. I've placed this line. So we're going to go to the lower time frame. We're going to identify it on lower time frame and see how that works. We're going to go to lower time frame right now. So let's step down to 15 minutes time frame. 15 minutes. So on 15 minutes time frame, on a 15 minutes time frame, you see there was actually a support. That, see what happened. This is the previous day. This is all these ones now are, these are previous day. You can see this is 18th. It's showing 18th here. 18th was yesterday. Today is 19th. This is the current day. All these ones are current day happening. So this is the previous day high. You see that line? This line we show this line. We actually mark this line on a D1. On D1, we put this horizontal line to show. So you can see that this candle broke high. This is a resistance level. All right, this is a resistance level that has been broken. So you see this candle, this buy candle took out this resistance level, or took out the previous day high, was taken out. So you see how you waited. You now wait for a support, for a return or retest of that level. The retest happen right here, and the entry will be somewhere here. You see, the entry will be somewhere here. And so this profit, your stop loss will be at the swing low here. This is your entry. This is your stop loss. So this is around. This could be your take profit. Like this is 2R, or you might want to go for higher. See, the market is still trending. Okay, the market is still going up. You can see the market is still going up. All right. So the market broke this high. Broke the level. Previous day high was broken, and there was a retest right here. And you see how the buy, stop loss right here, and this is our take somewhere around here, take profit. You can see. So the market might still go higher, right? The market might still go higher. So this is a strategy. So let us look for another one. Let's go back to the daily time frame. So I will be canceling. I'll be removing this candle. All right. So I'll be removing this line. So let us see another one. Let us see another one. You can see this one now. Let me remove that candle before. Remove that candle. Okay, now see this candle. See this one. See this candle now. See this candle. This is a previous day candle. So you can see, let us identify a break and retest on this. So the idea of this strategy is to identify a break and retest just where this breakout happened. Before you want to see something like this before you can enter. And if it's for a sell trade, you want to see this one. This is a previous day candle. You want to have this candle, this current day, break low, retest, and you sell. Your stop loss will be somewhere around here. Your stop loss will be somewhere around here. So let us see. I'll be placing my line again on this other one. See my line. Not only will I be placing my line there, I'll also be placing a box. I'll be placing a box right there so we can be able to identify it. Okay, so I'm placing a box. Let us go down to 15 minutes time frame. We are currently on a daily time frame. Okay, so let us go to 15 minutes time frame to identify what actually happened here. How there's a hangover from the previous day low, the previous day's high, to the current day of this particular situation. All right, let us go down to 15 minutes and see it. So you can see. Let us see where is it. Good, beautiful. You can see where I marked. I actually marked a line. I actually placed a horizontal line there and also placed a box on the H1, a daily time frame. So you can see now, this is the previous day's high was taken out by this candle. It was broken, and now there was a retest. And now there's a buy. So you place your stop loss right here. This is on a 15 minutes time frame. Place your stop loss right here. There's a retest, there's a break, there's a retest, and now there's a buy. So you place your stop loss. You are entering somewhere around here. You're entering here, and you can see you're doing your like a 2R or 3R or even more profit. Okay, so you can see how this works. Let's also see if we can see a sell scenario. Let us identify a sell scenario. Let's go back to to daily time frame. Let's identify a sell scenario. Let me clean this out so that we will not get confused by that. Let me remove this box as well. So you can see now. Let's place. You can see this one. Let us actually identify what happened here. How this breakout, this previous day was taken out and there was a sell. Let us identify how that happened. We just looked at this now. Let us see here. So let us see. We'll place our horizontal line right there. Okay, and then we place a box right here. Let us see what happened. So now we go down. We want to see what happened right here. Okay, we want to see what happened right here. How we could have entered this trade right there. There will always be a break and retest. There will always be a break. There will always be a break and retest, either to the downside or to the upside. There will always be a break and retest to the downside or to the upside. So now let us step down to 15 minutes time frame to identify that particular level. Okay, beautiful one. So you can see this was our horizontal line right here, and this was the rectangular block that we placed. So let us now see. Let us zoom in and see. So you can see that these are previous days. These are previous day. You can see this is This is October. This is October 9, and this is October 10. October 10, October 9, October 10. So the previous day's low is the previous day's low. Previous day's low was taken out here by this. It was taken out. This line broken. Previous day low was taken out. All right. So you can see like a retest. We went back to retest the zone or the support level. All right. It was a support level. This was a support level. A support level. So market broke that level, previous day's low, and when this low was broken, the market now retested it, and we could have enter around here. Place your stop loss around here or around even here if you wish. And now you see how the market traded down. This is our take profit. So this is a very lovely, easy strategy, very easy strategy that you can actually start using, that can help you. Very easy to use. It's not complex. But you see, I believe in trading simple strategies. I don't like complicating things. I love simple strategies. I love strategies that are easy, that you can wake up from your bed and look at your chart and you can identify a strategy and you just trade it. All right, beautiful strategy. Just ensure you do it on the trading market. Avoid the consolidation market. All right. And another thing you need to know is that you need to avoid you need to avoid choppy market. You can see, try doing it on the trending market. All right. So that is it. So please, if you're here to subscribe to this YouTube channel, please kindly subscribe. Please subscribe to this channel and give this video a thumbs up if you found it helpful. Give the video a thumbs up if you loved what I just did. If you love this content and you benefited, you learned something from it, share with your friends as well. Also, if you are yet to join our Telegram channel, I have a Telegram channel. The description box of this YouTube channel, you're going to see, of the description box of this video, you're going to see the Telegram channel. In that Telegram channel, what do? I post free chart analysis almost every day. The chart analysis of the trades I take, I share it in the group, the Telegram channel. So join that group so you can actually take trades that meet your criteria. And if you feel that the trades resonate with you, you might want to take it. All right. So when I actually post them, and I also do one-on-one mentorship program. What I do is that I take you by the hand and train you and coach you until you become a good forex trader. All right. I take you from the scratch and until you become developed and become a good forex trader. If you want me to train you, you can find my contact detail is in the Telegram channel. All right. So till I come your way next time, do have a wonderful and lovely